We've really thought that the catalysts are very similar over the last 10 years that we've covered the company. Is really about production volumes and gross margin and maintaining the prospect that this company is really transforming the transportation market. And we think both or all three of those things are still very much in place. What I think we're starting to see is real rollouts of actual functionality where these cars are driving through urban areas without drivers really directing the vehicles. That's a big deal in terms of the sophistication and the safety element of this as they put that data in front of regulators. And as regulators get comfortable with this technology and they continue to accelerate their learning cycles, there's a real possibility that we're not waiting 5 years, but we're waiting more like 2 or 3 years for that sort of service to roll out. And at that point, we can't see a real structural change in terms of valuation because I think people will see this as disruptive for the entire auto industry and really seeing Tesla as an innovator that's well out in front of their competitors.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm going to be reacting to some comments from stock analyst Colin Rusch of Oppenheimer, one of the OGs of covering Tesla stock and actually understanding the company, who believes that Tesla stock could see 50% plus growth from where it is today over the next 12 months, predominantly on the back of progress in autonomy. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Before we get into the video, it's always good to understand whether or not the analyst we're hearing from is credible. So let's bring up Colin Rusch's tipranks.com profile to see his track record over the last few years in terms of his ratings on stocks. Okay, here we are guys, looking at Colin's, oh crap, wrong profile. Wait, where? What company is that? Have you guys ever heard of Page Shill? I don't know. Anyway, sorry, wrong profile. My mistake. This must just be in my history. There we go. That is much better. Colin's profile on tipranks.com. Check this out. Ranked number 4 out of 7,404 analysts on tipranks.com. Number 7 out of 15,368 overall. In other words, Colin is a true outlier. Incredible track record with ratings on stocks. Somebody who has a high level of credibility, whose opinion on the surface is probably worth listening to, all other things being equal. In fact, let's see what Colin's had to say about Tesla stock since he began covering the company. So we've got a $1,036 price target for 12 months. That's 54% upside. Let's have a look at these ratings over time. Has Colin been consistent or not on the company? Coverage began all the way back in 2013. Buy, hold, buy. 0 sell ratings to date. Looks like it's worked out all right. Average profit on the stock, over 180%. Not bad.
Tesla stock on a rally right now. It's up about 6% right now. It's currently sitting about $695. Kathy Wood's ARK Invest Management said over the weekend that it expects Tesla stock to hit $3,000 not long from now by 2025. That's obviously up from where it's at right now. And at a $3,000 price point, the company would be worth almost $3 trillion. So to get a pulse on that call and their own call, we have Colin Rusch. He's an analyst at Oppenheimer. And Colin, I understand you have an outperform on the stock, not as high as 3,000, but where do you see the trajectory for this company, which, by the way, has been a moving target over the past few months, very volatile stock?
So before Colin answers, I just want to point something out here. ARK Invest $3,000 Tesla stock price target is a 2025 price target. Colin Rusch has a $1,036 price target for Tesla stock over the next 12 months, suggesting 50% upside. Just for fun. Now, I'm not suggesting that this is the way that Colin and Oppenheimer are thinking, but just for fun, let's see what would happen in theory if Tesla stock grew at the same rate they're predicting over the next 12 months for the next few years until 2025. Where would that theoretically get Tesla stock priced to? So let's assume that Tesla is around $650 today. We'll add 50% to that. This is approximately where Colin's price target is for 12 months. What happens if we add another 50% for another year, right? So we're 2022, now we're 23, 24, 25. Well, what do you fucking know? Now, I know this isn't a perfect example. I'm just trying to illustrate a point. The comment there from the host on Yahoo suggesting that Colin Rusch and Oppenheimer aren't as bullish as ARK Invest on Tesla stock may not necessarily be true because they're only giving a 12-month price target, whereas ARK Invest are looking out to 2025. In theory, as you can see here, if Tesla stock gains at the rate they're expecting to over the next 12 months for a few more consecutive years, they'll end up in the same ballpark as ARK Invest anyway.
Yeah, obviously valuation is hotly contested right now on this stock and many stocks in the climate bucket. But what we're looking at is that the key element to the story for this next leg, as we see them really as a clear leader in EV technology, is really moving into the autonomous technology. And what the advantage they have is the number of cars that they have on the road. So if we look at the key benchmark being about 6 billion miles of testing to really validate autonomous vehicles, they've got about 1 million vehicles on the road, and if you assume 10 to 12,000 miles per year on each of those vehicles, they can really go through that testing process and validate, in new technologies in that AV space every 6 months or so. And as we move into level 4, where you can really take your hands off the wheel pretty reliably on these vehicles, Tesla's really in a key position from a data collection perspective on training their AI systems.
Absolutely nailed it. Autonomy is unquestionably the next leg in the growth story of Tesla's stock. And as Colin pointed out, Tesla is in a key position from a data collection perspective, which in turn allows them to train their AI. As I've said many times on this channel, Tesla's full self-driving data lead is unassailable. It's really just a matter now of watching Tesla pull further and further ahead.
Colin, to that point about achieving autonomous driving, potentially within the next 5 years, or at least that's really the projection that ARK Invest is hinging their bull case scenario on here for Tesla. Analysts have really been speculating that Tesla could launch that robo-taxi service for more than the past 5 years now. So what's different now than over the past couple years here? And is there a near-term path to actually deploying these services?
Yeah, so there's a couple of things that are really critical from our view. One, the sophistication of the internal technology is continuing to evolve. The learning cycles are accelerating. As they have more cars on the road, they're able to collect more data. But the internal learnings, just in terms of their team and how they've approached this, has continued to evolve very quickly. And so, a few years ago, they talked about driving across the country with a self-driving vehicle. That never happened. What I think we're starting to see is real rollouts of actual functionality where these cars are driving through urban areas without drivers really directing the vehicles. That's a big deal in terms of the sophistication and the safety element of this as they put that data in front of regulators. And as regulators get comfortable with this technology and they continue to accelerate their learning cycles, there's the real possibility that we're not waiting 5 years, but we're waiting more like 2 or 3 years for that sort of service to roll out. And at that point, we can see a real structural change in terms of valuation, because I think people will see this as disruptive for the entire auto industry and really seeing Tesla as an innovator that's well out in front of their competitors.
Allow me to translate Colin's jargon. So he was suggesting there that as Tesla's full self-driving software improves and autonomous vehicles begin to roll out onto roads, we can see a real structural change in terms of Tesla's valuation. Translation: once robotaxis are on roads, Tesla stock to the fucking moon. And why Colin is suggesting this is the entire model shifts. No longer are people looking at how many vehicles are being sold, what are the margins on those vehicles, blah blah blah, that's about it. We're now looking at what is the total install base? How many users does Tesla have? How much ongoing recurring high margin software revenue will he have? What will happen to the price of the full self-driving software, etc.? So Colin has a great point here. Once people see evidence that, holy crap, Tesla really is solving autonomy, they really will have these autonomous vehicles on roads, every analyst who has any brain cells at least will revisit the company and go, oh, wait, they're not an automaker, are they? How do we value this shit now? What do we... Oh, software market. Oh, okay, software multiple. Oh, holy shit.
And Colin, one big story about the growth narrative for this company is the Chinese market, right? And we did see the news on Friday. The stock blinked, but it did recover on Friday that the Chinese government will restrict the use of Tesla vehicles by military staff and employees of some state-owned companies. Apparently, there's some government security concerns about the vehicle cameras maybe recording images in those cars. Do you think that the China story is still as big as it was, let's say, a year or two ago for Tesla? And if so, why not?
I actually do think it's as big. And we actually wrote about the U.S.-China dynamics around climate-related technologies this morning. It's an area where there's some serious common ground, but there's also a lot of contention. And so seeing Tesla, see some restrictions within China borders is not a huge surprise. As everybody thinks about security concerns with these vehicles driving around, and I think that's an ongoing question for this technology in general. When you look at autonomous vehicles and the fact that these cars really can't see out into the road and collect information and transmit that back to whoever owns the data. As it pertains to Tesla's China strategy, it's been an element of driving down costs through ramp up, and China really being a leader in terms of EV technology adoption. They really have been out in front of the other countries in the world, and it's a critical market both from a supply chain but also a demand perspective. And Tesla's brought some important technology into that market. They've been working with battery suppliers. They ramped up some very efficient manufacturing there, and it's a key driver of profits in our view. We'd expect them to begin exporting some of those vehicles at some point in the not too distant future into other markets, and we think they already are into other Asian markets. But we might see that begin to happen into the Middle East and Europe out of the China market, just because the cost of production is so much lower.
I completely agree with Colin here. I think Tesla's goal with the Shanghai Gigafactory, ramp production as fast as possible, produce as many vehicles as possible out of China with lower labor and parts costs. They fully localize their supply chain now, and over time export China-made vehicles after they've met local demand to other areas in the Asia-Pacific region, including the likes of Australia and New Zealand, as well as many other countries within Asia and elsewhere in that region.
And Colin, I'm wondering too, just as for Tesla investors, just thinking about the next catalyst here for this stock. Of course, there was no shortage last year, inclusion in the S&P 500, multiple consecutive quarters of profits. We had the ramp up of the Shanghai Gigafactory, as well as the build out underway for the Berlin Gigafactory. What do investors really have this year to grab hold of if they're looking out at the next 12 months or so?
We've really thought that the catalysts are very similar over the last 10 years that we've covered the company. Is really about production volumes and gross margin, and maintaining the prospect that this company is really transforming the transportation market. And we think all three of those things are still very much in place. One, we're expecting very strong production numbers this year, and there doesn't seem to be an issue with sell-through. As they ramp up volumes, we should see those gross margins come down. We're going to see increased support at the policy level, both in Europe and the US here, likely by the end of the year. And then it's about dreaming the dream of what this company can become. And we think as they roll out incremental functionality on the autonomous side, that dream becomes more palpable for investors. And that's why we remain very, very bullish on the stock at this point.
Spot on. I completely agree with Colin here. I think overall, until the stock market widely accepts and believes that Tesla really will have autonomous robotaxis on roads moving people around without human drivers being necessary, until the stock market widely recognizes and accepts this fact, there is huge upside potential in Tesla stock, in my opinion. Now, I don't have a crystal ball, but I suspect that sometime in the next 12 to 36 months, we'll see the stock market widely begin to accept Tesla's winning of autonomous vehicles and how important this is to the company. And therefore, I suspect sometime in the next 12 to 36 months, we're going to see Tesla stock see an enormous increase in valuation. Now, anything could happen. I don't know for certain, but my hunch is once the market widely and universally begins to look at Tesla not as an automotive manufacturer, not as an energy company, but a transport as a service company, I think everything changes. I'd love to know what you guys think, so let me know in the comments below. In 12 months time, how much will Tesla stock be worth? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.